Good afternoon, traders and investors. Will back here with another one, coming to you with a Tuesday market recap. Hope everybody had a very beautiful long weekend. And in today's markets, guys, well, we had a very mixed session to say the least. SPY and QQQ were green. However, our two other major sectors were very, very red. Financials and healthcare over 1% to the downside. So what exactly happened in today's markets, guys? Well, we had a consumer confidence report come in early on in the morning, and it did show that consumers have a bit more confidence in the economy than they've had in the 3 months prior. It was actually a record read in relation to the last 4 months, our highest read since that period. However, it did also show that consumers expect inflation to be higher for longer, well into the next year, aka 2025. So off the back of that report, it did show some good signs. However, those increased expectations on inflation from consumers did contribute to a very healthy rise in yields today, guys. Take a look at your 10-year, almost up 2% on the day. And the 20-year as well, very aggressive move, about 2% to the upside. We haven't really seen this large scale move since we were back here in the month of April when we were getting very bad CPI reports, right? So that was definitely doing some damage on the day. And you can see this best expressed in the heat map here, guys. Big tech was very much alive today in green for the markets. However, that is because they are cash-rich companies, guys. They really don't get hit by inflation news or interest rate news. But what does get hit? Financials, healthcare, and the bottom half of the market. So you can see today was a very mixed day of trading. Only energy, big tech, and semiconductors running away with the show. But everything else, guys, really to the downside. Very mixed market, especially on a relatively low volume day coming off of that holiday weekend. Take a look at your one-day relative as well. You can see very mixed market, to say the least. Energy, technology, communication services performing well. But for the most part, guys, the rest of the market bleeding slightly to the downside. And that leaves us with a one-week relative, guys. Only technology in the past 1 week of trading has been outperforming. The rest of everything has been down, and multiple percentage points at that. So still seeing a little bit of consolidation in our markets at the top here. QQQ doing a great job of keeping our markets alive, but we need to start seeing some of that relief performance come in from financials and healthcare if we really want to start gaining the levels to the upside on the SPY. So before we get into further technical analysis, guys, let's jump into that consumer confidence report that kind of gave the markets mixed signals this morning. So let's take a look. U.S. consumer confidence rises in May after 3 months of decline. So what exactly were consumers saying? Well, consumer confidence in the U.S. rose in May after 3 straight months of decline, though Americans are still anxious about inflation and interest rates, very understandably, of course. Now, consumer expectations of a recession in the next year rose again in May, but are still well below their peak of May of 2023. More than 2/3 of respondents to the survey said they believe a recession is somewhat or very likely in the next 12 months. So 2/3 of all consumers potentially expecting a recession. That's in contrast to the Conference Board's survey of CEOs, only about 1/3 of whom foresee a recession in the next 12 to 18 months. So CEOs really on the opposing side here of your retail, right? Only 33% of CEOs believe that there might be a light recession to come. But over 2/3 of consumers do believe a recession is likely to come. And I do think, guys, that's just a byproduct of them being squeezed for high prices for such a long time. They just don't feel that the economy is too good right now, despite all the positive earnings that we've seen from companies. Now, the number of respondents who said they planned to buy a car, this is very important, guys, because it touches on the financing for larger items. Think cars, homes, and appliances, right? So here is your answer. The number of respondents who said they planned to buy a car rose slightly for a second straight month, and those who said they planned to buy a major appliance rose for the first time in several months. So consumers now have been patiently waiting on the sidelines for interest rates to decline, but now after they haven't seen any declines, maybe they're finally ready to make those purchases that they've potentially been putting off for about a year at this point. Still no hard evidence for that, right? But it's apparently they are turning the corner, rounding the corner now to maybe make those purchases. However, not the same for homes. Take a look at this. Consumers who said they plan to purchase a home remained at its lowest level since August 2012. Sales of existing homes slumped in April as high mortgage rates and rising prices discouraged potential buyers. Obviously, guys, this is most people's largest purchase in their entire lives. So they will probably wait before buying homes until interest rates really start coming considerably down. Now, more cautious spending in the face of inflation has some big retailers offering discounts. We've seen that from Walmart and Target, right, this summer. The latest quarterly earnings reported by big retailers show that while consumers have not stopped spending, they are becoming more price conscious and choosy. And guys, we've seen that on the channel, right? We've reported earnings from everybody pretty much in consumer discretionary at this point. Starbucks, Nike, Walmart, Target, and the list goes on. McDonald's, right? All of them are saying the exact same things, that although the consumer is still spending, they are being very price conscious on what they choose to spend on. So that is pretty much the summary of your consumer confidence level once again. So now let's jump right back into our technical analysis and see where it leaves us on our indexes. So in terms of the SPY here, guys, SPY still in a relatively very healthy daily uptrend right now. The daily higher low is still set at last Thursday's trading, this big red candle right here. So now SPY kind of forming a little bit of a tightening range. So we obviously are going to wait for a volatility break of either one of these two levels. If we get the break to the upside, perfect, daily uptrend continues, and we just create more and more space above our previous all-time high section for that eventual retest of the weekly higher lows for the trend change. However, if we lose these levels over the course of the week and flush this daily higher low, 525.50, well, then you will be looking at the start of a daily downtrend and could be in for that weekly consolidation on SPY right away. However, we have a very juicy area of support here, guys. Our previous all-time highs, the 12 weekly moving averages right within that zone as well, 516. So anywhere between 525 and roughly 515 could be a great location for the bulls to pull back temporarily before giving us that next leg higher. But as I've said, guys, the QQQs cannot do it on its own. For SPY to really start breaking out, we need to get cooperation from our other major sectors, financials and healthcare. Now moving into QQQ. QQQ really stealing the show today again, right? So very nice daily uptrend by the Qs right now and still moving higher and higher and higher. No red flags in sight. Keep an eye on your 12 EMA. If we were to lose this 12 EMA, usually that is synonymous with daily consolidation. But as of now, no real red flags. They are pretty much the industry leader. In terms of our weekly, guys, the weekly is looking absolutely gorgeous on QQQs, putting a lot of space between us and the most recent highs. Keep an eye, guys. We now have a cushion of about 3 to 4% before coming down to our weekly 12 EMA. So if ever we have a little bit of rotation going on, let's say financials start pushing up, healthcare starts pushing up, and the QQQs take a well-deserved breather, that could be a nice little location for the breakout, retest, and then eventual run for your QQQ sector. That is potentially the trade that I'm looking to make on a lot of big tech names who are set up relatively the same as QQQ. Now moving on to financials. Financials still trapped in this daily downtrend. Unfortunately, right, we are really coming into our big area of support right now, which is this red box. This red box is our previous all-time highs and should be acting as a nice location for the bulls to play defense. That being said, guys, we're kind of running out of runway right now. On the weekly, your higher low is right here, 40.2. We are looking to set that weekly higher low to eventually get the trend change back in the bulls' favor. And we're currently tapping the 12 EMA right now at about $41. So if the bulls want to play defense, guys, it is pretty much now or never, because if they take back too much of this move, guys, it's just going to end up potentially keeping us maybe in a tightening range for financials. For the breakout to continue, guys, they really need to put a stop now, because if you throw the fibs on this, you can see clearly that we have now taken back roughly, let me just blow this up for you guys, sorry about that. We have now roughly taken back 61.8% of the move. This is pretty much the do or die level for the bulls, because if they take back too much on the weekly, guys, the probabilities do favor, at best, a tightening range, at worst, obviously, the weekly downtrend. So obviously right now, in the context of a bullish market, we're not expecting the downtrend. However, it's just to say that the bulls really need to get their butts in gear right now if we want to see financials continue powering higher on gorgeous weekly uptrends. Now, moving into healthcare. Healthcare as well, taking a big drop to the downside here today. Healthcare really not having a great last 3 days of trading, right? Down almost 3% top to bottom since last Thursday's open. Now, moving into the daily, right? Daily is a clear daily downtrend right now. So what the bulls need to do eventually when this move is done bottoming out here, how do you know the move is bottomed out? Need to see the reversal into an hourly uptrend. Once we get that, we will be looking for the size of the retracement to eventually recapture this into a daily uptrend. On the weekly, however, we're not looking too bad because when we zoom out, weekly downtrend, nice engulfing move by the bulls, looking to set a weekly higher low to get that eventual weekly trend change. I would not like to see the bulls lose more than this level right here, 141. It is your 26 EMA, and it is also the start of your big prior range of consolidation, aka your prior all-time highs. Still right now looking for the monthly higher lows as well. So that's why I say I would really not like to lose too much of this level, because similar to financials, if we take back too much of the move, could just be a tightening range formation for a while, or worst case scenario, the weekly downtrend. Not expecting the weekly downtrend so far, but those are just the expected scenarios in the event that we continue this slide further and further down into the levels. What you want the bulls to see right now, obviously, is start bouncing, reacting from these levels right here, the lower 142s, and start manifesting into a new daily uptrend. Then and only then will you know your weekly higher low is set and that we're moving on to potentially attack your previous all-time highs. Moving on to semiconductors right now, semiconductors really blasting higher, and that was really off the back of NVIDIA's fantastic day, almost 7% to the upside, so really lifting this entire index. Now, our daily uptrend is well in motion right now as soon as it does top out. Just looking for that daily higher low, anything above 228.90 is going to be looking for that daily higher low for further trend continuation. No red flags whatsoever. If anything, guys, we just may go back to touch our previous all-time highs, which are sitting right here at about the 240 level. Nice little retest and maybe run. Wait for this 12 EMA, this moving average right here, to catch up to our prior all-time highs. Could be a great location for a little bit of a swing trade on that continued momentum. And the weekly is looking absolutely gorgeous, guys, after this weekly downtrend. Fully engulfing move by the bulls. So as soon as they are done this move up, let's say we were to lose this daily uptrend for a little bit further consolidation, perhaps, just going to be looking for the weekly higher low for further trend continuation. And this would be a gorgeous opportunity, guys, if ever it does present itself to us in the 230 location. 12 EMA is right there on the weekly. Retest of your previous all-time highs and maybe run. I will be looking out for this one, guys. Anywhere between 240 and 230 seems to be a great swing trade location. Moving on to the Russell right now. Russell not having that good of a day, guys, because of the increase in interest rates, right? So daily downtrend still remains tight in the Russell right now, looking for that lower high. And then can the bulls save this for the eventual lower low, or will they be able to save this and put in a new daily uptrend? That is what we're on the watch for. But the Russell is extremely choppy right now, guys, right? Chopping around at your previous 52-week highs, desperately trying to set the weekly higher lows and get that weekly trend change going. That is pretty much the moral of the story for the Russell right now. We don't have enough momentum right now to break that 212 location. So the bulls are trying to gather more strength in these lower levels right here, 204, 203, to eventually make that weekly trend change attempt, right? So looking not too bad by the bulls right now, but if we want a swing trade, if we want the perfect entry for a swing trade, in my opinion, that would be closer to the 200 all the way down to roughly 197, this little pocket right here, tag the 26, and maybe do for a little bit of a run, start attacking this 212 once more. And now lastly, our Dow Jones. Dow Jones not looking too bad at all, despite being down about 0.55%, right? The reason I say it's not looking too bad is because we're still trying to set that weekly higher low for the eventual trend recapture, right? We lost the uptrend right here by flushing these lows. The bulls are now desperately trying to get that back. But what the Dow Jones needs, guys, is we need more market breadth. As I've shown you guys, financials and healthcare have been very weak as of the last week of trading. And if it wasn't for our outperformance in big tech, well, you can see this on the 1 week relative, right? Look at your 1 week relative. Nothing participating in these markets except for big tech and a few defensives such as Walmart and Costco. So we really need those other components to start coming alive, and those will undoubtedly save the Dow Jones as well. So the Dow Jones still in this huge leg of daily consolidation, still no daily downtrend. However, we still haven't set the lower high into lower low. This is just one big daily leg down right now. Take a look, not yet oversold on your 4 hour, and even on the 1 hour here, guys, we are deeply oversold, but just not oversold yet on the higher time frame. So we're going to be looking for that. If ever we do continue this push lower into tomorrow, that is when we may see 4 hour oversold conditions. And if it brings us down to this location right here, 38,600 to about 38,300, could be a juicy little opportunity, guys, because this is your prior support. Resistance could be using it as support once more. And I'll remind you, we are just looking to set that weekly higher low to potentially attack these all-time highs once more. So the Dow Jones not having the best last 2 weeks, but at least the higher time frames are supporting a bull breakout currently. That's pretty much everything right now for our major technical analysis on our indexes. Now let's jump into our big tech names, shall we? So Apple on the day, pretty much flat, right? 0.01%, not much movement up or down. So in the context, guys, of this gorgeous daily uptrend, right now, what happened, guys, is we flushed the lows, we got the new highs. So right now, really just a wide range of consolidation. If we get the break of the all-time highs or not all-time highs, 52-week highs, if we get the break and close above, well, then your trend is reestablished. However, if we break Thursday's low, 186.74, daily downtrend has commenced, and then we will look out for the beautiful trade that I've been waiting for on Apple now for a few weeks, which would be weekly higher lows for the eventual weekly trend change, right? We were in this beautiful weekly downtrend by the bears, engulfed it completely. Now, eventually, we're looking for that weekly higher low and getting the weekly uptrend back. So if we're not able to get up and above this area of resistance above us right now, 194 to 198, I do believe we maybe retest the lower 180 levels, gather a bit more momentum, and smash to the upside. This trade location right here, 183 down to about 180, could be a super juicy location, guys. Pick these lows. The weekly moving averages are right there, right? We want the breakout, retest trade, and then run. Could be a great trade opportunity. Moving into AMD right now. AMD having a fantastic day off of the NVIDIA bullishness as well. So AMD finally breaking out now and above, guys. So dealing with the 174 area right now. 174 is not quite resistance. That resistance is really set at about the 182 level. So great momentum by the bulls right now. What are we looking at here, guys? Well, it's kind of choppy, right? Thursday's trading really threw a stick in everybody's wheels in terms of technical analysis. So this candle, although it was a little bit of an anomaly, guys, it does show us, however, that the bulls played amazing defense down here at the 160 level. So what we're looking for now is as soon as this move tops out, looking to set that daily higher low and move into a new daily uptrend. So that little retest area, this location right here on AMD, 165 to 160 could be a gorgeous swing trade opportunity. Pull back, set the daily higher low, use these moving averages as support because now we're above these moving averages, something we haven't really been above ever since the early month of March, right? So very nice recovery by AMD, looking for this level of swing trade right now. And this just goes to complement our weekly trend breakout as well. Now the bull setting a gorgeous new weekly uptrend. So in the event, we get a little bit of a pullback into these lower levels right here, 165 all the way down to about 160 could be a juicy trade location, higher low on the weekly as well as on the daily, and for the further break to the upside. That is the type of trade I'm looking for on AMD right now. Resistance currently set at about the 182 level. Moving into Amazon right now, Amazon up about 0.77%, doing a great job of recovering from the lows. However, Amazon is still in this daily downtrend right now. So what the bulls need to do to reverse this is break and close above 185.13. Give me an engulfing move over 185.13, and we can talk about resetting the daily uptrend. If ever this daily downtrend simply continues right now, well, we have a gorgeous location of support below us here, guys, right? Take a look at all of this level of support, pretty much 175 up to about 178. Great pocket for a trade on Amazon, in my opinion. What are we looking to do on the lower time, the higher time frame side? Weekly uptrend is confirmed. Just looking for the weekly higher low, anything above 166.21. Weekly higher low for that eventual uptrend continuation on Amazon. Looking very, very good. I just need a little bit more to get very, very greedy on Amazon. If I see a 170 handle, 179, 178, 177, I will consider going a little bit more heavy on this one for a swing trade opportunity. But all in all, looking very good, especially when you focus on the higher time frames. Moving into Google right now. Google up about 0.96%, almost 1% on the day. Google's chart is just a masterpiece, guys, in terms of a nice daily uptrend after earnings. So that daily uptrend simply continues right now. Seems as though we found our daily higher lows after regaining our hourly trend, right? This is why we monitor the lower time frames to gauge when we get that hourly trend change. That is when you usually know your daily higher lows are set. And look, they set it perfectly in line with that daily 12 EMA. Now we will be looking for a break of your all-time highs. Let's just call it 180 for all intents and purposes. If, for whatever reason, Google fails and rolls over and break Thursday's lows to the downside, we have our first official daily downtrend on Google in quite some time since the month of April. And that would just be looking for a weekly higher low for that eventual weekly trend continuation, right? Target these weekly higher lows right here, 165.43. tons and tons of space for the bulls to look with. So all in all, Google looking extremely, extremely healthy right now. Very tough for me to initiate a position at this level right here, but if I would be holding a position, there's really no red flags for me to cut it right away. Now, moving on to Meta. Meta up about 0.36%. Very nice day on Meta as well, right? They tried to break this level of resistance, still cannot get it. So we will see, guys, is fourth time a charm for Meta? This is pretty much the 482 level. So we have some nice momentum leading into it. Need to find a break and close above this level in the next couple of days of trading. If Meta can get that out of the way, then a retest of this area would be an extremely juicy trade, guys. This is the classic breakout, retest, and run trade that we're looking for. So if ever we do get that, this is going to be the trade location that I'm looking for. Retest into this level right here and maybe do a little bit of a swing trade for Meta for a long. The stop loss goes under your lows right here, and your take profit is pretty much your all-time highs. So some decent risk to reward on Meta. No real red flags to speak of. However, if fourth time is not a charm right now, or rather third time, excuse me. If third time is not a charm and we roll over and break these lows right here, it would be a daily downtrend, and then we'd be looking for the weekly higher low on Meta. Target this area right here. I've been talking about it for a while. 450, right? The retest of your maybe 26 EMA. Not saying it's going to go as low as 450, but 460 to 450 could be a juicy sweet spot to swing trade Meta if ever they need more momentum before making an attempt at this 482 level once again. Now, moving on to Microsoft. Give me a very quick second. All right, so moving on to Microsoft here, guys. Very healthy day by Microsoft despite being flat. I love this candle formation right now at your all-time highs. Daily uptrend, clear as day right now on Microsoft. Daily higher lows are set. So now we're just going to be looking for a break of the 433. Now, Microsoft is currently dealing with the all-time high resistance, still not clear above it right now. What we really need to see is a very green candle close above 433. Then you will have a new all-time high, and you'll put in a lot of space between these lows right here for a potential new higher low for further trend continuation. It's very tough for me as well to initiate a position on Microsoft right now, but if I were to be holding a position that I've acquired somewhere down here, there's really no red flags to sell, even though we are at the all-time high resistance. In terms of your weekly, guys, look at this beautiful weekly move by Microsoft, right? Got caught in this range for a while, almost lost the lows, but pretty much quadruple bottom on those, and now a huge engulfing move to the upside. So if ever Microsoft is not able to get the job done at the all-time highs, and we were to set up into a daily downtrend, let's say the markets start consolidating a little bit and revisit maybe the 415 level, which is the prior end of the top range of support right now, that will be support. It used to be resistance. Just going to be looking for a weekly higher low for further trend continuation. Target your 12 EMA here, guys. It is literally right at that 415 yellow line, the top end of that prior range resistance. Going to be a very nice area of confluence. If ever we pull back into it, could be a juicy little swing trade opportunity for the eventual all-time high breakout. Moving into Netflix right now. Netflix also looking very, very healthy today. 0.35% to the upside. Very nice chart on Netflix. Beautiful daily uptrend. Daily higher low is set, and now we're just looking for a break of those 52-week highs for 651. If we do get the break here, guys, and the weekly just goes nuts for some reason, well, we are looking for the retest of your all-time highs, guys. They're coming up on it quickly, right? 690, 695. That is the last line of defense for your bears right now. All in all, no major red flags whatsoever. If we were to fail this and lose these lows right here, 630.17, daily downtrend would be set. We have a ton of support down here, guys, in the lower 610, 600 level. So keep a watch on that. That would just be looking for your weekly higher low for further trend continuation. So the bottom end of this green box right here, 605, 610, confluence with the 12 EMA could be a gorgeous area for the breakout, retest, and weekly uptrend set in motion. Now, moving on to the big boy, NVIDIA. NVIDIA, guys, 7% to the upside. Absolute monster. Makes me feel bad about selling some of my shares here after the earnings for that swing trade. Could have had a lot more in the game, but that is just the nature of trading, right? Very, very rarely will you get the tops and bottoms. The most important part is making profit. So in terms of this, guys, gorgeous, gorgeous daily uptrend right now. As soon as this move tops out, and we are getting a little bit overbought on the daily, but you guys know it's NVIDIA, right? Very overbought on the 1 hour, and even on the 4 hour, guys, extremely overbought, right? 88 RSI on the 4 hour. So as soon as we lose this move right here and set up for the hourly downtrend, lose this 12 EMA on the 1 hour, that will be most likely your daily consolidation. Daily consolidation has tons of space though. Anything above 920, just going to be looking for that daily higher low for further trend continuation. So we'll see how this goes on NVIDIA, guys. But one thing's for sure, if for whatever which reason we get a daily downtrend, an extended daily downtrend here for a week or two, and we start retesting some of these levels of previous all-time highs, 965 all the way up to about $1,000, could be a juicy swing trade location to then get on for that further trend continuation. The weekly is looking absolutely monstrous right now. And even the monthly, guys, the monthly is looking very, very good for continuation. So I'd be hard pressed to believe we're going to get a huge sell-off. But one thing's for sure, if I do see that $1,000 or even sub $1,000 level, retest of this range right here, I will be making another swing trade on NVIDIA. Now moving on to Tesla. Tesla also, I mean, it's down 1.39%, but it's not looking the worst, right? Because we are protecting these lows right here, right? Let's call it about 173 to 171, the levels that the bulls absolutely cannot lose because we are currently maintaining daily structure. It is still a daily uptrend, barely hanging on, but it is still a daily uptrend. So what the bulls really need to see here, guys, is obviously that break of the 186. Break of 186, daily uptrend is well in motion, and we can maybe start putting in a little bit of a rally here for a maybe weekly uptrend shift. That would be a break of 198, break and close above. You would have your first weekly uptrend on Tesla since the month of November. So it's been a very long time, guys, about 6 months running at this point. Still just weekly consolidation right now, right? Very tight range of consolidation. The one thing that they cannot do, guys, on the weekly is lose these lows right here. If you were to lose your 160, unfortunately, it would be weekly downtrend again, and then it would really not be looking the best for finding these monthly lows. Your monthly lows would just not yet be set, and then once again, we'd be looking down to the 150 level to act as our last line of defense. So the bulls have put in a decent amount of work so far on Tesla. However, the breakout is just not convincing yet. I really need to see us get above our range of consolidation, guys. This green box, we need to get out of it, and that starts at about the 182 level. So get above 182 and start maintaining some of these higher levels, 185, 190, 195, and then we can really talk about Tesla's ability to start recapturing some of these longer term moving averages on the weekly and push into this big 200 level of resistance. Moving into Palantir right now. Palantir still just hovering around the lows right now. Not too much action. Really been sidelined since after earnings, right? So daily downtrend is still in motion right now, but bears not able to get much continuation on that. That would be really a break of these lower levels right here. 20.4. Break of 20.4 just continues the daily downtrend and just sends us hunting for that eventual weekly lower low, right? So that would be, once again, weekly downtrend reiterated. And once again, we would still be hunting for that elusive monthly higher low. We've been trying to set it for the past 3 months. Just appears as though it's not there yet. I still do maintain that 20 all the way to 19 is a gorgeous level to be continuously trading Palantir. Huge support from back here, resistance, and now the fact that we're up, above, and pulling back into it, and the bears are not able to really flush this chart too much, shows us how strong this level of support really is for your longer term bulls. So all in all, looking fairly decent on Palantir, but eventually we will need to reset this into a week of daily uptrend right now, and that would be a break of 22. Give me a break of 22, and then probably carrying us in to the 23 level, probably get rejected there, but just need to set the daily higher lows, use these levels as newfound support once we get there, guys, and that will probably be a nice cue for the bulls to get that breakout once again. But as of now, price action on Palantir is still fairly muted, so still a decent opportunity, guys, to be selling some options in this lower area, in my opinion, and that's what I've been doing. And now lastly, moving into PayPal. PayPal really struggling here, guys. Despite being up 1% on the day, they were actually up a lot more on the day, almost close to 2% before giving a lot of it back. So daily downtrend is in motion right now, looking for that lower high and potentially retest of these lows. Now, how high has the bounce gotten, right? They did a nice little bounce this morning, but gave it all back. So if that's the extent of the bounce, guys, it's not a very good bounce. The bounce only getting up to about 38-40%. Not high enough, guys. The probabilities do favor the bears for a retest of these lows at that point. So we'll be keeping a close eye on this level right here, 61.27. Break that to the downside. Unfortunately, your daily downtrend continues. And what do the bulls need to do? Well, I need to see more of a bounce here, guys. Need to come at least up into the 63.75 level, give ourselves a lot of space between us and these lows, and start resetting this into a new daily uptrend. If we were to lose these lower levels down here and come below my green box here, guys, it's really not going to look pretty. It's already not looking the best on PayPal right now. right? Unfortunately, new weekly downtrend on PayPal coming to these lower levels, guys. If we do break into this, the next area that we likely will retest at that point will be the lower 58, 57 range. Not looking the best for the breakout on PayPal. This could be a very interesting level, though, to play some short puts if you are looking to farm a little bit of premium on this stock specifically. I really need to see PayPal get its butt in gear and start reversing some of these nasty daily downtrends, guys, that we've been having pretty much since earnings almost for a month at this point. So that's pretty much everything for our technical analysis, guys. Now let's move into some of our trades that we took in my portfolio today. So guys, taking a look at the portfolio, you will see that not much has changed in terms of new positions. So we have a couple covered calls after being assigned some shares, right? So we got the SoFi $7 covered calls, got about 10 cents for them last week. We were assigned SoFi at $7. You can see that right down here. 1,000 shares plus the premium received. Our average cost is about $6.95 on this new SoFi position. And so this extra 10 cents will contribute to bringing that average cost all the way down to about $6.85. So we'll let those run over the course of the week and see what happens, whether or not we get called away. Palantir, same thing. We do have the 21.5 covered calls that we wrote last Friday. Those are still roughly around the same price. We will see if ever we get called away on Palantir shares. Our average cost on the assigned Palantir shares that we've been running for about a month right now is now all the way down to under $20, about 19.95 to be exact. So we'll see what happens with this one across the week. Now, we also did write some Chewy puts for tomorrow. Chewy has earnings, right? Only a few companies having earnings tomorrow, and I'm not going to be playing all of them. I'm going to be playing Chewy, going to be playing CRM, and still undecided if I play any of the other ones, right? We also have a lot of ones like Kohl's, right? Foot Locker, Dollar General, Okta potentially, C3AI. Still unsure, guys. Really going to keep it light this week in terms of earnings plays because most of them are consumer discretionary plays, and I really don't feel the need to play that sector extra aggressively. But probably the ones we will be playing is most likely Zscaler on Thursday. Costco a little bit too expensive, but I'll keep you guys updated on all the earnings plays as I look into the premium, and if I find good deals, I will play them. But for the most part, probably staying away from a lot of the consumer discretionary ones. Now, that being said here, guys, so we wrote the Chewy's for 14.5s. Chewy has earnings tomorrow, right? They're trading about 16.91. They have earnings first thing tomorrow morning. The 14.5s are all the way down here, guys. That would be an all-time low for the company, right? So we're really looking to pick the absolute bottoms on Chewy. We did some analysis on them last quarter after their most recent earnings, and I didn't really find anything too bad. The company's seemingly rounding the corner to profitability right now, and the valuation really isn't too bad at these lower levels. That's why I was comfortable. Only 2 contracts though, so we do have a lot of cushion here, guys, between us and 1450, about 14%, which is roughly twice the expected move. So we'll see how those goes. Very small position for me, right? Only 2 contracts, 15 cents each, 1%. We'll see how this one goes. Now, we also have the Amazon 177.5 puts that we wrote last Friday. Those are performing very, very well. So if Amazon continues marching up over the course of this week, we should be able to close this at a 90% profit, or just completely worthless if we let it ride into Friday. So far, so good. Now, we did have a few positions that we opened on Celsius Holdings, the 73 puts and the 72 puts. Well, Celsius Holdings, what happened today here, guys? They had a huge drop on the morning, right? From top to bottom, they were down almost 18% at one point. Why? Well, unfortunately, it was a battle of the analysts here, guys. So we had one analyst coming in here from, I forget which firm right here, coming in and saying that they view the demand as healthy, 30-40% US sales growth expected through the year end 2024. So this was one analyst, but then we had Morgan Stanley analysts coming in and promoting an opposite view. They offered a different perspective. Looking at the last 2 weeks, year-over-year sales growth for Celsius has slowed on a sequential basis. So a few analysts reducing their price targets, but these analysts up here increasing their price targets. So when I see such confusion around a company without the company coming out with its own news, usually that is a nice buy the dip opportunity. So we were able to really smash this one out of the park early on in the morning when Celsius was trading around the $80 mark. That's when I wrote these $72 and $73 puts. You can see I got decent premium for them, 34 cents on the 72s, 39 cents for the 73s, so pretty much 0.5%. And those contracts are almost worthless right now, already roughly 75% profit. So we'll see how those ones go. I also tried to make a little call attempt on CLH this morning on the 95 calls, picked them up for 50 cents each, and was really waiting for them to run. However, the problem was, even though I picked relative low levels, they kind of hesitated around here for at least the next hour of trading. So I had to close them at a tiny loss, guys. I bought them for about 55 cents, and we closed them for roughly We closed them for roughly 36 cents. We lost about 20 cents each contract there, about a $40 loss. Not too big of a deal in my opinion. The contracts, we just didn't get that rebound quickly enough. And even towards the end of the day, even though we rebounded, higher than when I initially entered the position, look at the value left on these calls. Since it's a shortened trading week, guys, only 15 cents. So I closed it at a loss, but it could have been a lot wider loss. So that's just a quick little summary on what happened with CLH. We still have the CRM 250 puts leading into earnings, $1.78. We'll see what happens to those earnings tomorrow on the Wednesday session. Of course, we also wrote Fortinet. Fortinet was one of our top 10 plays we were looking for yesterday. So I was talking about Fortinet, anything below the expected move of 59.81. Well, the market's blessed us with a gorgeous dip opportunity today, and I was able to get the 58, as I was saying, as close to these lows as possible. So we got the 58s on Fortinet, 23 cents for them, not quite 0.5%, but fairly happy with that with only a couple days of trading left on in the week. We'll see what happens with those. I also added to my Square position. So you guys obviously know we got assigned 100 shares of Square last week. Our average cost is 67.64. We added to the position. Square was another one that I featured on my top 5 options video last night, and the market's blessed us with a gorgeous dip opportunity as well. So early on in the morning, when we were trading down here in the mid 65 range, is when I pretty much fired off this short put order, and we got about 29 cents. We actually got 30 cents, but minus $1 in commission. So almost 0.5% rule, guys, but not quite. And you can see we're already decently in profit on that one. We have a decent little cushion on this one before the 63 level, right? So between us and 63 right now, currently a couple percent, right? So between us and 63, about 4.5%. So fairly decent amount of wiggle room on Square at this point. And 63 really is the lower portion of this wide range of support, right? So looking fairly good on that trade right there. Covered calls on the assigned position on Square. Got these last Friday, no secret there. And then only a few remaining positions, the Amazon Leap call, the CRM earnings play call that I was talking about in yesterday's video. You can see I'm already a little bit down on that because CRM was a little bit more red today than it was on Friday. So we'll see what happens for them on earnings. Still think the company is slightly undervalued. So would be very pleased if we do get that earnings pop. Earnings really show that the company is very, very profitable and focusing on cost control. We also have the Leap call on CRM2. And here's the remainder of our position, still in the Intuit swing trade position here. May add a little bit more shares. It was down to 595 early on in the day. Didn't add to it. I really want to see 590 or lower. Don't know if we're going to get there. That's just the target that I want for this. There's the Square assigned shares, Palantir, SoFi, add my Canadian banking shares. So that's pretty much all the updates for today, guys. As I said, I will be probably entering more trades potentially for the earnings tomorrow, or depending on market movement, right? If we find another big red company, like something dips like CLH tomorrow, like 7, 8, 9, 10% type of thing, or we get a tremendous dip on one of our big tech names, especially something like Meta, I'll probably be taking a swing trade on that one as well. So that's pretty much everything I had for you guys today. Hopefully you enjoyed the video, and if you did, consider dropping a like. I really appreciate it for the growth of the channel. Also consider subscribing here if you're new. We do these videos every single Monday to Friday after the close. And as usual, if you have any questions whatsoever, guys, anything, stocks, technical analysis, options play, anything you want, guys, leave it down below in the comments and I'll get back to you within the first 24 hours. So take care. See you tomorrow after the close. Happy trading and peace.